let's see, valuing accounts receivable. So the issues with accounts receivable, right, that I want everyone to be aware of here is how do we actually determine that the accounts receivable is collectible? That's the issue. So I'm saying that, let's say I performed a service for you, or I'm going to perform a service, and I give you an invoice with net 30 terms, which we've discussed before. Hey, you're gonna pay me within the next 30 days $1 million for all the services I performed. Well, when economic times are rough, or sometimes when customers don't like the service, they may decide not to pay you. And that would be deemed uncollectible. Well, we know that based on our accounting principle, we always have to value our assets for what we expect to collect. So that's called the collectability. And so we have to value our accounts receivable based on what we expect to collect. So it wouldn't be appropriate if I bill my friend $1 million and I know he has no money. It wouldn't be appropriate for me to put that accounts receivable on my books because I'm not expecting to collect it. And so we will have to value the accounts receivable, or something called write down the accounts receivable and our sales in order to make sure that we aren't overstating the accounts receivable or depicting that our business is going to collect more money than we truly expect to collect. So this is a good example of how large receivables can be. Most of the companies you're going to work with have significant receivables because they allow deferred billing terms, where we say, if you're working with any business, so B2B, business to business sales, that have deferred credit terms or deferred payment terms. So you're going to have some kind of accounts receivable. Businesses normally don't expect just to collect cash. They give them, they'll sell on receivables. And so how do companies protect themselves against this risk is they'll generally do credit checks on their customers. They'll make sure that they have a purchase order from the customer and make sure that the customer has a history of paying, or make sure the customer is credible. So just like any person, each customer will have a credit rating, and they may run a credit check on that customer. As you can see here, pretty significant balances. Kawa Golf, almost 20% of their balance sheet is receivables. So you must maintain separate accounts for how they track customer purchases, what's been paid and what's owed. This is an entire job that you can get into, just managing accounts receivable if you stay in accounting. So accounts receivable, generally the process would be you have to see what's been invoiced, you have to deal with customer relationships, make sure that you're collecting, and then if collection is uncertain, you would have to write it off. And so we're going to talk about that entire process today.